Welcome back. I'm Pratap here. Today is the 16th May 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Yesterday we have identified 3 high liquidity zones and we got trades in all the 3 high liquidity zones. So how we got the trades? Let us look into this analysis. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So from our NeoStock YouTube channel, click on this community tab and then you can find this post. And this post is having a YouTube playlist link that will take you to all the training videos. You just click on this link. I'm clicking on this link. Now we get into the playlist Supply Demand Zone Price Action course. In this playlist we have all the training videos. You just scroll down to the bottom of this page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in that channel. Even any other important updates also we will provide in that channel. Now let's get into the analysis discussion. So yesterday we have identified 3 high liquidity zones. And all the 3 high liquidity zones are from 75 minutes time frame. Yesterday we did not find any high liquidity zones from the daily time frame. And the first one is a conquer. This is a 75 minutes high liquidity zone. We have a drop, 4 base candles and again a drop candle. So this is what identified by our software. So we have fine-tuned this particular zone. First, we have fine-tuned at 15 minutes time frame. This is the 15 minutes time frame. Here we have a rally, 2 base candles and a drop candle. This is the 15 minute zone. Inside the 15 minute zone, again we fine-tuned with 5 minutes time frame. So I am changing the time frame to 5 minutes. Now look into the 5 minute zone. Inside the 15, we have an excellent drop, base, drop. We can draw a zone like this, but here a small pro gap is there. So that's why I'm extending up to this small area pro gap. So this is the way we can plan our trade. And another advantage is, see here, before entering into the zone, there was a rejection before this. That indicates there is a strong order flow in this area. So definitely this is going to be a very good trade for us. And see today what happened. Today prices just entered into the zone and then see the rejection, how prices came down. And finally it reached the 15 minutes target. This is the 15 minute demand zone. I'm changing the time frame to 15 minutes. Here you have a drop, base, rally. So this is the target zone. And when we got the trade today at 9 o'clock 45 minutes candle, we got the trade in the 5 minutes candle and finally reached the target at 11 o'clock 15 minutes candle. It reached the target. Within 2 hours the trade is completed and the conquer has given 15,400 rupees profit, which is 7.5% ROI as per one future margin cost. Because always we are calculating the ROI based on one futures margin cost. So this is an excellent trade. And the next one is Shriram Finance. This is also a 75 minute zone. Shriram Finance. Already previously I explained how to fine tune, but let us discuss once again. This is a drop base rally. And this 75 minute zone we fine tuned with 15 minutes time frame. In the 15 minutes time frame we have a drop, base, rally. This is the 15-minute zone. Inside this 15-minute zone, again we have a 5-minute zone, but that is a high liquidity zone. This 5-minute zone is a high-minute zone. We have a drop, 3 base candles and a rally. At type 3 level, we have fine-tuned this zone. Type 3 proximal entry. Why type 3 proximal entry? Because this high liquidity zone is picking up the orders from this area. From this type 3 proximal entry, this has been picking up. See here, this is a first time it is tested here, but this is anyway, this is part of the leg out. So leg out is picked up the orders from in this area. That means here we have a strong order flow. See again, prices entered into this zone and see the strong rejection. Thereafter again prices, thereafter prices again entered here, again entered here. So this is the area. And today see what happened? This zone is violated because every high liquidity zone will be having some expiry period. So today it is violated. But the point you need to understand, institutions kept a trap here. I already explained you bull trap and bear traps. Many times you will see bull traps or bear traps below or above the important zone. So this is the demand zone. Below the demand zone, you will see the trap. And also I told you during the bull and bear trap related training lesson. I think bull and bear trap is the recently available training session, if I am not wrong, in our training videos. The most recent video is about bull bear trap. Look into this zone, 5-minute zone, the 15-minute zone. The fine-tuned zones are at the distal line of the 75-minute zone. And many times, when you have fine-tuned zones at the distal line of your high liquidity zone, many times institutions keep a trap below this. Not only that, this is a high liquidity zone. Definitely more liquidity will be there. That means more people will be planning their trades in this zone. If this is stopped out, more people has to exit from their trades. If more people are exit from their trade, institutions will get more liquidity to grab the liquidity. See here below they set a 5-minute trap. We have a drop, 3 base candles and a rally candle. Drop, base, rally. And moreover there is a pro gap is also there. This one really concerned me. That means institutions very cleverly they created. So mostly the order flow will be in this pro gap area. So that is the reason why I have drawn the zone up to this pro gap area. The small area. Many times in this pro gap area, if the pro gap is very small, institutions keep a huge order flow in that area. Because it is a small area. See today what happened? Once this high liquidity zone is violated today, thereafter, we just picked up the orders from this pro gap area. And then see the move. But here, this is the 15 minutes target area. But there are other institutions, they created a 5-minute high liquidity supply zone. When there is a 5 minutes high liquidity supply zone, what happens? Mostly it will not allow you to allow the prices to enter into this 15 minutes target. This itself will be holding. See how it is holding the prices today. Most of the day, this zone, 5-minute zone, did not allow the prices enter into this. Then what is the best choice? Best choice is exit, book the profit. In this 5 minutes high liquidity supply zone, if we have a good RR, already 6% ROA it has given by the time prices enter here. That itself is good. Our average ROA is 6% intraday ROA for high liquidity zones. So exactly 6% ROA we got. But there are some people also may expect the prices will reach up to this 15 minutes target. That possibility is also there. That's why in the Telegram group I alerted you guys. In case if anybody is eyeing for this particular 15 minutes target, it is not easy because 15 minutes high liquidity zones may not be allowing you. See, the normal 5 minute zone, we have a rally based drop. Easily this is violated here. We have one more drop based drop. This is also easily violated here. But this one, drop based drop, high liquidity. Why we can say high liquidity? The reason is high liquidity zone, maybe multiple tests it will give. That is one possibility. Second possibility is the high liquidity area may create a new zones again and again. See here, rally, 2 base candles drop. Again, it is having a rally, base candle, 1 base candle and drop. Multiple times it created the zones. Not only that, multiple times it is holding the price, even today also. So because of these reasons, we predicted this could be a high liquidity zone. So as we predicted, it is completely holded the prices for several times. So what time it reached? At 12 o'clock, 5 minutes candle. But finally this is broken, but how many hours? 2 o'clock 30 minutes. This is at 12 o'clock 5 minutes. Almost 2 hours during the intraday, it holded the prices. It is intraday, holding the prices 2 hours is really a big challenging. Definitely some point of time you need to exit. Because ultimately at the end of the day, this zone is violated and reached the 15 minutes target. That is a different story. Suppose if this move did not happen, then? So that's why we need to exit. So this is the 5 minutes area is the best place to exit. But if anybody holded the prices for 2 hours and then you exited at 15 minutes zone, means really you are a lucky guy. It is a rare situation happened today. It may not happen like this every time. So it could be a lucky trade for you if you are holding up to 15 minutes. So that's why in the Telegram group I told you, if anybody really don't want to exit here, still you want to look for 15 minutes target, you can go for a 5 minutes trailing stop loss. So your 5 minutes, 1 minute trailing stop loss. Your 1 minute zone would have been violated somewhere here in this area. Then you would have got even less profit if that is the case. But according to me, practically holding these 2 hours, not knowing where price is moving, either up or again further it will go down, and holding the prices is really a challenging. Because the price action is completed now, easily we can tell. We would have holded, we would have got a more than double profit we would have got. Compare it to this. Anybody can tell by seeing the chart. Before this chart, see, here I posted somewhere, I think this is the area I posted in this candle. I posted in our Telegram group because I have seen, probably prices reach up to here, it will hold. That's why I told you. This is the area will not let you pass the prices easily. That means you need to book your profit here. That is what the indication. If not, at least use 1 minute trailing stop loss. But see, after that what happened? It reached the target, and your target 5 minutes high liquidity zone target gave you 6% ROI it has given. After that, see how many candles it holded. Again, once again, one more test. Again, pushed the prices down. You may not be knowing what is happening. See here, prices came all the way here. What would have happened if prices further came down? All our profits would have been gone. See here, again it came down. And finally from here, the last hour of the trading session, the momentum is changed and finally reached the target, 15 minutes. But this is not a practical scenario, holding this much time just like that, believing it will reach. It is a lucky trade. That's why I'm telling. If anybody is holding, it is a lucky trade for you. It is a lucky profit for you. But this is the more practical scenario. Exiting at a 5 minutes high liquidity supply zone. And that way, Sriram Finance has given 8,475 rupees profit, which is 6% ROI as per one futures margin cost. So this is an excellent bear trap trade today. And the last one, we have third stock also. Yesterday our software identified. That is India Cement. Even India Cement we got a trade. But aggressive trade. Let me show you. This is the 75-minute zone. We have a drop, 5 base candles and a rally. This is what our software identified. This 75-minute zone. And this we fine-tuned with 15 minutes time frame. 2 15-minute zones I have identified. One is a drop, base, rally with a pro gap. And again you have a drop, base, rally. From these two, again let's move on to the 5 minutes time frame. If you look into the bottom one, the 5-minute zone, the same area is also a 15-minute zone. We have a drop, 2 base candles and a rally, but look into this 5 minutes base candle. This is a ERC candle. This is a big candle. That's why I'm having some doubts about this zone, whether to accept or not. Even if we accept, see, after that again prices came and entered into this zone and it is tested. That's why I didn't find you, I just left it. Because when you have a doubt, better leave that. I looked for even traps also within this area, but I am not feeling any comfortable in the near to that. Lot of, see, bottom we have to go, but that is not a good for a trap. That means this zone is not having a proper trap also. So that is what left out. But what I identified is, apart from this, even before that, here it has a fine-tuned zone. Drop, base, rally with pro gap, we have a fine-tuned zone. Apart from this, see here, we have a rally, base, rally. But there is no 5 minutes fine-tuned zone here. Without fine-tuned zone, can we plan a trade? If you plan a trade, it is an aggressive trade. Aggressive trade should be supported by the price action clues. So what is the price action clue? The price action clue is price rejections before this zone. Prices came down, see here there is a rejection and there is a movement. That means there is a strong order flow in this area. That is what indication. But this one price action clue is not good enough. What about next? See, once again prices, see here, came near to this zone area and again they moved up. This is another rejection. Even here, even today, you see here, today prices entered into this zone. Today morning 11:30 candle. Came very close to this zone and again there is a rejection. So all these price action clues are good enough to understand in this area there is a very strong order flow. Definitely you can accept a trade here. Moreover, the risk is also minimized. There is nothing wrong in planning a trade. See what happened today. The prices entered into this area at 1 o'clock 45 minutes candle. And again after that the prices were moved up and finally reached the 15 minutes target. This is the 15 minutes target. We have a rally, base, a drop and follow through candles. And finally, see the last candle, last 15 minutes candle, even though we did not consider this trade, once again it came, slightly pierced and again see the pushback. Okay, but this is, forget about this. This is the last 10 minutes trade. Ignore it. But this is a valid trade because this is at 1 o'clock 45 minutes, 5 minutes candle. We got the entry and finally it reached the target at 15:10. So that means within 1 hour, I think within 1 hour, 20 minutes, the trade is completed. And this is the way India Cement has given 5,945 rupees profit, which is only 2.7% ROI. Because the future cost is over 2 lakhs. India Cement. That's why ROI is come down. So this is an aggressive trade at 5 minutes demand zone. In 75 minutes HLQ zone. Price action clue is rejections before this zone. Price rejections before these zones. Okay, these are the 3 stocks we identified and all the 3 stocks are resulted as a successful trades. But I don't know how many of you are really fine-tuned these zones exactly the same way and took the trades. But the point you have to understand, it is a lucky day because all the 3 stocks what we got trades. Whether some stocks we got a good ROA, some stocks we got half of the expected ROA, average ROA. India Cement we got only close to 3%, 2.7 or something. But remaining 2 stocks, we got the ROA, minimum exact ROA we got in one stock, a little over 6%, that is another one 7.5% ROA we got in Conquer. And moreover, Conquer ROA is, Conquer is not Conquer. Sriram Finance is 6%, that is up to 5 minutes high liquidity zone. We didn't calculate up to 15 minutes target. I calculated only up to 5 minutes high liquidity supply zone target. Until this 5 minutes high liquidity supply zone, it has given 6% ROI. Please remember that point. If you calculated up to here, probably you would have got maybe the 14%, close to 14% or 13% ROI you would have got. So these are the high liquidity zones we identified from our yesterday's list. Let us all meet again in our next video. Thank you.